A day trader is discussing a chart analysis tips. A day trader is discussing chart analysis tips. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten morgen, guten tag, guten abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magnet.com. Today we want to discuss a chart analysis tips. In this video, I want to share with traders few tips and tricks that they can use for day trading if they are analyzing a financial instrument, looking at the chart itself, not the technical indicators. I have here the euro-dollar currency pair on the 2-hour chart, one of my favorite time frame, all right? And we want to ask, how we should buy, at which point we should buy, how we can time, the market using a chart analysis. All right, pay attention. I recommend to traders to watch the full length of this video, all right? So they may understand clearly what we are talking about here, all right? So, in order to analyze the charts, we must look on our left-hand side, okay? So the price here now, where my cursor is, but as we are analyzing the chart, we must look on our left-hand side, okay? So we want to see what has happened before, all right? So what has happened before? The price went down, you see here, follow my cursor, went down, and then form a double bottom here. So what I'm going to do now, I'm going to start drawing line on my chart. So price went down, going to color it now into red. So price went down, it's bearish. Okay, that's the red line. So from this point all the way here. And then the price formed a double bottom chart pattern here on the 2-hour charts. Now the double bottom pattern is a validation of a support level. But when we see a double bottom chart pattern, which is a bullish chart pattern, we must know where and when a bullish chart pattern is formed. A bullish chart pattern will be formed on or near a key support level. And the market pattern must be bullish. If the market pattern is bearish and we see a double bottom chart pattern, we must use a top-down trading method, to validate, the setup. Very, very important. So here we see the price went down. We don't want the video to be too long. And then form a double bottom chart pattern. Okay, follow me carefully. Stay with me. This is about the chart analysis. And I want to share with you my tips how I'm analyzing this euro-dollar on the 2-hour chart. So after the price formed a double bottom pattern, price resumed a new trend, went up, and went above the knot. This is the knot here of the double bottom pattern. Very important. This point here, the price must find a support above this point here. This is what I call the knot. Let me draw a line there. You can see the price breaks above the knot and retest it here. A beautiful place to buy. Traders responded and bought it here, and the price went up to display a new higher high. So price went down first, formed a double bottom pattern, and then went up and formed a higher low that is above the knot. Invitation to buy, and the price went up again, forming a higher high. Right here, this is the higher high. Now the price is pulling back, okay? Now you can see that it starts changing direction here. Where do we buy, okay? There are few points where we can buy this euro. One is here, on the edge of this trend line. You see this point. And this point, if I join it together, I'm going to have too many lines on my chart. I don't want to clear them. So this will allow you, to stay very focused. All right? So do not watch this in the kitchen when you are cooking. All right? Be focused, okay? So this is the trend line. We can buy on or near this orange trend line, okay? But I don't want to buy here. Why? Okay, I don't want to buy here. I want to buy instead here, this point here, you see this level here, okay? If I extend that line, okay, I want to buy in this zone here. I want to put another spotlight there. Are you with me? Okay, the bigger one here. I would prefer to buy here. Why? That's a very good question. Why I would prefer to buy here instead of here. Now, if I'm buying here, I don't say that you cannot buy here. If you are buying here, we need to control the risk carefully because the risk is quite high. If we are buying here now, the best place to place our stop loss is below this level here. Let me tell you now, below the level of, I would say instead, the level of 10876. All right, 10876. That will be okay. All right, we will prefer to buy on here the level of 10876 right here. That we will prefer that. So if we sell here now, no, my apology. If we buy here now, we will prefer to hide our stop loss behind the level of 10876. Okay, so 10929, and we want to hide our stop loss here at below 10876. It's quite a lot of pips to use for this day trade because there is a little bit high here. I don't want to use a bigger stop loss if I'm trading here. So how do we handle that? So because the stop loss, the best place is to hide it below the level of 10876, which is the line here, the horizontal line here. But because you can see that it's quite high stop loss, if you want to play it, all right, because we can use the 2-hour chart, our setup as our setup time frame, and then if you are using the TSCW24, we go to the first best time frame, okay, to start trading. But in that case, because we know that we need okay, a bigger stop loss, but if you decided to buy here as it is now, you must use a tiny stop loss because you are not willing to use a bigger stop loss to hide it behind the level of 10876. You will use maybe maximum, okay, 20 pips. So what you are trying to do, you are saying, okay, the risk is high. This is not, okay, all right. 20 pip is not enough to control the risk, but I'm willing to use 20 pip. And if they take me out, I'm not going to complain about it. So it's in fact a kind of gambling, all right, but an intelligent gambling. So you know that the stop loss, normally we will prefer it to be below the level of 10876, 10 pips below. So I'll talk about 10866. So somewhere below 10876, 10 pips below 10866, all right, something like that, all right. That will be the best place to place our stop loss. But because we are day trading, we don't want to use a bigger stop loss, all right? If we decided to enter the trade here, which is a bit risky, we must use a tiny stop loss. But remember, I asked you a question, why I prefer to buy here. I will come back to that in a minute, okay? So stay with us. So the risk is high. The best place is below 10876. We don't want to use a big stop loss. Therefore, if we want to trade it now or enter the trade here, we'll use what I call a tiny stop loss, 20 pips maximum. If they take us out, we will not even blink, all right? We will just ignore it like we did not enter the trade at all, all right? The next thing, talking about chart analysis, look at this candle here. You see this candle here? This is a bearish candle. So what this candle is telling us, this candle is telling us that there were sellers here. You see how they sold it here, and the price dropping down. So this candle here is telling that the price went up fast. So the price did open here, went up all the way here, and there were sellers here that push it back down. So probably some of these sellers would like to sell again here in this zone. All right, this is one of the reasons why I don't want to buy here now, because I'm afraid of these sellers that are here. Okay, there is another place where we can also look for opportunity to buy. Is above this level here. This you see the gray. I'll call it now into orange. Pay attention to the horizontal orange line. So you see the first scenario, we can buy here, but it's risky. In that case, we'll use 20 pip maximum. Okay. Now the next place is to buy okay, in fact, above this level here, okay, 10970, in that zone, 10970, okay? So either here, or if you don't want to buy here now, you buy instead here, 10970, above 10970. Why? Because of this candle here, this bearish candle here. Okay? It makes sense? If you buy above 10970, in that case, your stop loss should be below this low here. It's quite high. It's quite high. Okay? It's quite high. It's quite high. Stop loss. That's the best place. But again, if you don't want to use a bigger stop loss, you will use, okay, maximum 20 pips. Okay, your entry and your stop loss, 20 pips gaps. Okay? But let me explain to you why I do not want to buy here now. Because in my view, I would prefer the price to pull back completely down to this zone here, 10876. This move that is going down, I would prefer it to come to bring the price back down to 10876 zone. That will give me a better place to look for opportunity to buy. So if the price comes to 10876, I do not just go and buy. I will use again a top-down trading method. The 2-hour chart will be my setup time frame. I may use 15-minute time for my signal, and maybe 5 minutes or 3 minutes for my entry as the price pull back here. So that's what I'm saying to you. I'll prefer to buy here. But the reason why I prefer to buy here, I want to tell you something very important. Pay attention. This video is about a day trader that is discussing a chart analysis tips. We are analyzing the euro dollar, okay, chart on a 2-hour chart, okay? So you look, the price went down fast from a double bottom pattern, okay? So went down, follow me, and then from a double bottom pattern. And then it went up again, and then pulled back, and then went up to display a higher high right here, okay? But why I prefer to buy here? The reason is what the price has done in this session here. Okay, you see here, from here to here. If you look carefully, the magnitude, okay, or the price progression from here to here is almost equal to the movement from here to here. Are you with me? Talking about the length or the magnitude of the price progression from here to here. Are you with me? It's almost equal to the move from here to here. I don't like that. Normally, according to the wave principle, if the bullish momentum is quite strong, this move from here to here should be longer than the move from here to here. So because the move from here to here is almost equal to the prior bullish move, is telling me that the bullish momentum is not as strong as we are expecting it to be. Therefore, I would prefer the euro-dollar currency pair to pull back, which means we cancel this progression, which means I prefer that the price will cancel this progression and bring it back to the starting point, forming a kind of a cycle point, which means a former, okay, a price move 180 degree, okay, went up and pulled back to the starting point. That's why I would prefer it to come back to this point here. It makes sense? It makes sense? It is also powerful. So in a normal bullish progression, remember my friend, price goes up, okay? It's about chart analysis, a price pullbacks, okay? As the price display a first higher low and start going up, if the bullish momentum is very, very strong, the third move is usually longer than the first move. It's usually in a normal, healthy uptrend. The opposite is also true in the downtrend. Price went down, okay? And the price rally a little bit up without canceling the first move. The third move, in normal condition, if the bearish momentum is strong, should be longer than the first move. If it is less than the first move, is indicating, okay, a weak bullish progression. In fact, is a little bit bearish, okay? But if the third move is longer than the first move, it's telling us that, okay, all right, the bearish momentum is quite strong. So we will expect another rally and the price to go back down a little bit. There are more to this. I will come back to it talking about chart analysis. All right. So the same thing we are talking about in an uptrend, price went up, pulled back. We will prefer the third move to be longer than the first one. If it is shorter, in fact, what I was saying here is bullish. Okay. So if the third move is shorter than the first move, is in fact a little bit bullish. All right, because the bearish momentum is not very, very strong. The opposite is also true in the downtrend. If we have the first move, second move, and the third move is shorter than the first move, is a little bit bearish. It's telling us that the bullish momentum is not as strong as it's supposed to be. So either it's shorter or equal to the first move. In that case, we will prefer the price to pull back to this point here before going up. So as you can see here, the move from here to here is almost equal to the move from here to here. In my view, I would prefer to sell again somewhere here, looking not to sell, but looking for opportunity to sell here. Use a top-down trading method, looking for opportunity to sell here, allowing the price to pull back to the starting point here in a zone of 10876. That's why I don't want to buy here, as a lot of traders are doing here. If one is buying here, one should use a maximum 20 pips, knowing that the risk is quite high. The price has a high chance to pull back all the way to 10876. Apart from this edge, this hotspot trading zone on the edge of the orange trend line, which is quite risky because of the bigger stop loss, as I explained to you at the beginning of this video, there's another level above 10970. All right, that will be another better place to look for opportunity to buy, which means it survives, goes above the level of 10970, find the support. We can look for opportunity to buy here again. But the best place to buy right now, in normal healthy condition, is in a zone of 10876, expecting the price to pull back all the way here. Does it mean that the price will definitely come back here? No. We are talking about chart analysis, risk management, where one can enter a day trade like a professional traders. One can enter here, but the risk is high. In that case, one will use 20 pips stop loss. That's it. If you are taking out, you don't even think of it. Another place to enter is above 10970, a better place compared to this one here. All right? Okay? Using again a top-down trading method, the setup, the signal, and the low-risk entry point. One will always check also the economy news. Because of what has happened, look at the pattern, price went down, price formed a double bottom pattern. Now a new trend has begun, price went up, pulled back, displayed the first higher low. But the third move, first move, second move, the third move is not longer than the first one. It's telling us that the bullish momentum is not as strong as we are expecting it. Therefore, as the price is pulling back now, the best place to buy is somewhere here, okay, in the zone of 10876. This is about, a day trader discussing chart analysis tips. I hope you have learned something from this video and we put it to use, to make excellent day trading decision. We are the TSTW24 traders talking about a day trader is discussing chart analysis tips. Until the next time, enjoy yourself and be very happy. If you like this video, please give us the thumbs up. If you dislike it, please make sure you give us the thumbs down. All right. If you have any comment, put it below. All right. If you love it, all right, share it with your friend on Twitter, on Facebook, on Google+. If you love our videos, what we are doing, feel free to subscribe to our channel. Until the next time, enjoy yourself and be very happy. Speak to you soon.